What's going on, ladies and gentlemen? Interesting day, huh? Not really a call for the old well, because we haven't really seen that much happen other than a nice little... It wasn't even that much. NASDAQ took a shoe bag to the downside, but just came all the way back up. So nothing's really happened. Except gold has made an all-time high. What's going on, guys? Well, what we've got to understand is, and I will keep reiterating this to you guys over and over again. It's no different to when you go into a company, a sales company, for example, and the team's there and they're all waiting like, okay, so, what's the plan today? Obviously, we're just going to talk about telephoning people or, just what people in sales talk about, okay? But there is this continuous repetition about what needs to be done to achieve the sale. There is this continuous repetition of understanding what's going on in the marketplace. And we always need to make sure that we keep reminding ourselves of where we are, because every trading day is unique. And also the bigger picture, as much as we are expecting certain things to happen, like your interest rate cuts, Bitcoin to the moon, as they all like to say. You've got ETFs that are due to be set up in Ethereum and Solana, not to mention XRP. Funny that is, XRP. Some things happen. I can't associate myself with this price action in XRP. I talk when it doesn't move. When it moves, it's not my department, ladies and gentlemen. And I don't think I just can't really talk about it. What do you want me to say to you? It's an anomaly. It doesn't happen. It's something that's not normal. So sorry, guys, I can't say anything about it. I mean, the more I talk down about XRP, higher it goes. I'm so glad I loaded up on that XRP. I just need to keep doing it and... Nah, that's not enough for me. I told you, man, my price projection. If it does come in, you guys get to request whatever you like, whether you want to see me dressed up as we're just going to continue with the live stream. In tonight's live, we're going to be talking about something that we need to remind ourselves of, because we are at that point now where there's going to be a big shift. Now, the topic at hand is the breakout, and we're going to be referring to an article that is suggesting Bitcoin is breaking away from a very big trend line. Don't worry about the interest rates. Don't worry about the yields. There's nothing to be concerned about. It doesn't even impact the markets at all. Don't worry about unemployment rate. Nah, I'm not interested. It's nothing to do. But the trend line, ladies and gentlemen. Now, what I'm trying to do here is not to discredit the idea of a trend line. It's to get you to understand that by just relying on a trend line, then if it works, then you will then have some form of data to back it up. When they say you got to have substance, you walk into a bar and then you meet a woman and then, you're asking her, hey, how you doing and all that stuff. And she's like, yeah, I like you. And then she goes and tells her girls and she's like, I really like about him. He's got substance about him. He's mysterious. Yeah, I can, I just love that guy. And he's like, yo, man, I was trying to cut that night. And man, she was just talking to me about personality. I just switched off. You get the idea. But the same substance that we seek when we're looking for justification in why price could go up or down, well, that's what I'm going to do tonight for you, to add a justification to it on why maybe this move could give Bitcoin a 20% surge. Maybe the old 80 to 85K Bitcoin could actually come through before the rate cuts. Maybe, what's your thoughts? Do you think we could hit 80K before September? Before my birthday? You know what? I'm calling it now. It's not financial advice. It's just a happy birthday projection for me. I believe that by the time we get towards September the 2nd, ladies and gentlemen, Bitcoin will hit that 80K. Now I'm waiting for the comments. I do want the comments. So make sure if you're watching this video back, or this live stream back, make sure you comment below. Do you think it's a fair projection, 80K Bitcoin? Well, by the time we're done with this, you'll probably understand what I mean. So, welcome to Traders Reality to anybody new and to all the new subscribers passing through. Mad love and respect to you all. You'll get used to the madness and the way that I try and aim to deliver information to you all. I speak a little bit fast. I do it all under one breath. Welcome to Tino's life. You ever tried those oxygen exercises where you're breathing in? Shut up, Tino. Let's have a conversation, gang. All right. Man. What have I been telling you all, man? Gold, man. I keep telling you all. Buy it. It's all-time highs. Equity hedge investors are now selling, ladies and gentlemen. And I said it. Platinum members, what did we say this morning? We said this morning that all-time high gold's going to come into play. And we're going to start seeing articles that gold is at the all-time high. Equity hedge investors are selling it. They've hedged themselves before, and now they're selling into this madness. Want to see the back of that? Here we go. So today's projections by the Platinum membership for the Traders Reality website. Want to see some flavor in euro to the upside. She did take a little bit of a tumble, but this was the Asian session low from yesterday. Very important area. We were looking for them to come down to effectively try and make a reversal back up. Don't worry, Bitcoin ain't going to do much. And then we saw euro do that flavor, but didn't quite take the full range that I wanted, but the full vector candle recovery had come into play with euro. So that was happy days. If anyone did manage to exploit that bad boy, I'm going to be getting into crypto in a second. I'll show you what we wanted to see with crypto. And here is the greatest one right here. Green vector candle to appear here. We wanted to see a green vector candle here. When gold came down, we want to see the green vector coming into action by breaking out from the 2,440 zone. Drum roll, please. I hope it bloody did it, man. What did we say? 2,440-ish? Yeah. 2,440-ish. Hoorah! Straight on the nose, ladies and gents. Green vector candle appearing, suggesting the narrative of the move to the upside to take the all-time high. We managed to see the success of that setup. We didn't quite get the I wanted to see 460 and above, but, 468. So that's happy days right there. And then oil is still consolidating. Oil is about to pull a very interesting number, guys. So those of you trading oil, just be very mindful because she's about to pull a flavor. I wanted to see oil move up today, but the setup, look at that, it's just stayed exactly at the entry point. So not so much of a drawdown, but it's just at its entry point, okay? Now, BTC. So when I give out these projections or the trade setup, there's logic behind why I've got these lines here. This is the Asian session high, the Asian session low, and then you've got a block vector inside of this range right here. The idea was to see Bitcoin go up and sweep the Asian session high. Now, when I do these setups, my goal is to try and get it so that people can actually make a return on these setups by paying themselves as frequently as possible. You can see Bitcoin did initiate the move lower, and then it made the move up, and it cleared the Asian session high. Happy days over there for Bitcoin. Now, Ethereum, we wanted to see a bit more flavor with Ethereum, but we didn't quite get that move, okay? We only saw a little bit of flavor, and this midpoint right here is the partial profit zone. So if you didn't take any profits off the table on Ethereum as it pumped to the upside there, it's come back down again. You're still in a profitable trade, but barely profitable. But obviously, by the time I'm done with this live stream, or when I end that live stream tonight, I'll be talking about what I expected to do going into Asia this evening. And then finally, we've got Solana. And we wanted to see Solana make a little bit of a move to the upside. And then we go over to Solana, and she did make the move to the upside. She cleared the range to the upside there, took out Asian session high, happy days. And now they're looking back to come and correct. But why is this important? Because gold going higher means that investors are like, okay, we've got a lot of things changing right now. And as I said before, equity hedge investors, what they're doing is they're loading up. They're selling. All this time, equity hedge investors are buying and buying and buying. You know that story about buying. Remember, look, the rise, the retrace, the continuation. We marked that off for you all today. Equity hedge coming into play. What's an equity hedge investor? His job is to make sure that he's hedging himself. So if he has exposure in the stock market, but the stock market ain't liking what's going on in terms of news announcements, what they're doing is they're preparing for those sort of scenarios. So this is where they buy gold inside of these ranges. And then this is what's led gold to make the move up. Funnily enough, gold's all-time high is when people are more prone to buy it, which means there could be some more selling happening in gold, which will naturally lead gold's price further up. Now, I'm going to be talking about the carry trade principle. Now, those of you that are new, please stick with me on this one because this is going to help you understand the relationship of the dollar, Bitcoin, Euro, Aussie itself, in relation to what's going on with the Federal Reserve going into this week and then, of course, in the next few weeks, okay? But before we get into that, let's have a look at what's going down in the space of crypto. So here it is, 20% flavor to the upside. According to this, Bitcoin has managed to break above a pattern that could result in a 20% rally in the coming weeks. So let's see what they're saying. Man, that was a pause, man. They say that you should pause when you're speaking and addressing people. You know, pause. Give them a chance to think about what you're saying. Quite frankly, I don't. You know, and I feel bad because you're expected to be like, okay, he said this, he said this, he said this, but he keeps on saying something else after what he previously said. So how am I able to absorb that? So, Tino, slow down. You can actually slow down anyway. So according to this, it does say that Bitcoin's broken out of a significant trend line, okay? And this is the projection. They're looking for the move to the upside. We just quickly hit that. There you go. So 20% move to the upside. Now, okay, I like the idea of it. Okay, I do like it. It's pointing into that idea. You got the pi cycle top indicator coming into play. People asking the questions, will the bull rally continue? Well, what we've got to do is we've just got to say to ourselves, okay, I mean, I want your opinions on this. Do you think it's possible that Bitcoin can sustain a 20% rally to the upside and go beyond the 72K range? Now, I said that I expect Bitcoin to try and end up at around 80K in September. And the only reason I'm saying that is because of what's going on with the Federal Reserve. Now, check this out. We've got this story over here. Where is it? Let me just remove that. No. Here we go. Inflation is easing, jobs market strong, will the Fed cut rates in 2024? The article goes on to say that August rates are likely to remain steady, all right? So there could be a possibility that they don't actually cut, right? It says it may see a 25, 50 basis point cut in September. And then the Fed signals possible rate cuts delayed to 2025 with 4 cuts projected next year. Going into the data itself with the actual interest rates, just go down into it. To help you understand that, the pace that they actually cut interest rates at, okay, let me just do it here. Look at how fast they increased it. Every single meeting it was going up, every single one, all right? They kept on aggressively increasing, okay? Now, they are looking for that same sort of behavior. Now, what I'm concerned about is if they do not get the actual, whoa, what's it doing? Yeah, if they don't get the 4 cuts or they don't get a speed of rate cuts the same way we had the interest rate increases, I think the market's going to be, it's not going to be liking that, okay? Now, something that's going to be making us think, okay, then, well, are they really bothered about rate cuts? That's the question, because you go over to articles like this, okay? You've got the Russell clearing out the NASDAQ. You also got institutional fund managers saying that we are back. Equities are back. That means investors are plowing into equities, which naturally is going to be helping the dollar, which could in principle affect inflation, because as long as people or companies keep declaring profits, that only means that people are spending money, and that's naturally going to keep increasing inflation. Remember, we're still in that 3% zone. We haven't gone beyond 3%. That means 2.9%. We've not really gone above 3.5. We're just stuck in this 3% region, which is why they term inflation as sticky, right? To put it into perspective, check this out. Stocks that were up on volume yesterday was 1,123 stocks. So it does it, you get the information after with this website, okay? Because they have to wait for the trading day. And only 67 were down, right? Exposure still 80 to 100%. And NASDAQ's got 1 distribution day, whereas the S&P has got 4. What does that tell you? It tells you that big tech is winning. It's where the money's going. Big tech. But the problem with tech is it's very volatile. And that's what we've got to be careful of. Now, going back to the idea of the carry trade principle, how is that going to sustain the idea of Bitcoin making a 20% move to the upside, or what they're calling the breakout. So you may remember a little while ago, I spoke about this carry trade principle. Now, the carry trade principle is something that institutional fund managers are actively doing every single day. And it is all on the basis of the LIBOR rates, which is, of course, the London Interbank Offer Rate, which has been changed. And this is the rate of return that the banks borrow to each other. Okay, so Bank 1 wakes up in the morning, goes to the office. Bank 2 wakes up in the morning, goes to the office and says, and Bank 1 says to Bank 2, yo, what's your flavor? And Bank 2 says 4.5. And Bank 1's like, all right, we'll go with 4.4. Nah, Bank 2's like, I can't do that. 4.45? All right, we'll go with 4.45. Thank you very much. Happy days. Business conducts as usual. Bank B gives Bank A that money. Bank B1, then goes and takes that money to, hypothetically, maybe, let's say, other high street banks and says, here you go. We got some money over here. Just put it to work. Oh, you got a government over there. Okay, I'll take that. Yeah, do you want this money? Yeah, okay, cool. Where's the Federal Reserve in all this? Hold on a sec. Don't we get money from the Federal Reserve? Do they give us the money? Who gives us the money? It doesn't matter. We'll just print it anyway. That's pretty much what the London Interbank Offer Rate is, okay? But the carry trade principle is something that they utilize to exploit the spreads in different interest rates across the world. One common carry trade principle is the Aussie yen. So the idea is that investors will take US dollars, sell them to Aussie. So imagine you've got an institutional investor who'll go up and be like, right, let's get the carry trade principle. I'm seeing that there's activity going off in the world. Dollar looks like it's going to start losing its strength. It seems like other people are getting on the bandwagon with this. Let's start getting some dollars changed. So they go and borrow dollars, a low yielding asset, for example. They will then take those dollars and exchange them over to Aussie. Then they will use that Aussie to go and buy NASDAQ indices, S&P or Forex, commodities, Bitcoin, stocks. And the correlation is that as Aussie yen is going up, the dollar is going down. So you go over to Aussie yen right now, and this is what you're dealing with. Aussie has been going up. This is where it gets a little bit tricky. You can see that as Aussie's been going up, so has the dollar, right? Which is why they say that this rally to the upside is this continuous short squeeze. The bears are saying it's a short squeeze, they're squeezing them all out. We're going to have the biggest market correction going. You ain't going to know what smacked you across the face. You thought Nvidia was expensive at $1,200 and you think it's expensive at $120. Ha! Wait till you see what happens with this. That's the tone for the bears of the street, okay? But as dollar and yen are trading like this is not consistent. It's not something right here because you've got dollar going up and Aussie going up, but you're exchanging dollars for Aussie. So that means that what's going on here is the stock market is creating the idea of hold on to your gains kind of thing. It's not forcing people to sell their dollar stocks, but it's forcing people to get more dollars to buy stocks, which is increasing the value of the dollar, okay? Now, when we actually consider Aussie right now, you can see that Aussie has gone down and dollar has been going down because dollar started to go down as Aussie only started to move up like this. That's not that much of a big move, okay? We're talking from July the 3rd. It's not long. We need to see dollar going down and Aussie shooting up, which does lead me to believe that if this move to the downside in Aussie is just a short consolidation for guys to load up so they're exchanging back dollars because maybe they want to take some of those dollars, all right, put them to work elsewhere. So they will sell their Aussie and then put it back into dollars and then get those dollars and then move it around and then play the game again so that when Aussie starts to move back up again, the process then repeats itself, where they then sell their dollars into Aussie and then use that Aussie to go and buy NASDAQ, S&P, Bitcoin, commodities, Forex, and stocks, okay? So this is a critical point right now in Aussie yen because then that would give us the underlying idea that if hedge funds right now are preparing for yet another move to the upside and pricing in the idea of the rate cuts, because according to sources, they are saying that the tool shows, or the Fed Watch tool shows, that there's a 91% probability, 91.2% probability of the Federal Reserve maintaining the current interest rates in August, with an 8.8 chance of a base cut rate in September. Okay, so they're maintaining it, but the street is expecting the rate cuts, so they're going to price that in. Okay, now things are going to change. They're saying here, look, the Feds are going to keep the interest rates zero, and instead there's a chance, that 85% chance that they could cut it at 25 basis points, but there's also a 13% chance of a cumulative 50 basis point reduction, while 75 basis points would only be a 0.5%. So what it's saying is that even though they are expecting them to hold the interest rates just in September, the idea is that they're still going to cut. And if they do cut, it's going to be an aggressive cut. And that's what's going on in the marketplace. They're effectively trying to price that in. Okay? Now, with that being said, can anyone hear me? Are we still live? Are we live? Can someone just comment? Yeah, flipping hell. Everything froze. So, we get the idea, okay? As Aussie's pulling down, it tells us that they could be preparing for another move, even by the principle of the vector candle. We're going to want to see them come back into that, which tells me that NASDAQ and S&P could still have more room to go up, which then leads me into the idea of Bitcoin's potential to go back in and continue further, just by understanding the carry trade principle, because that's what hedge funds are doing, long used by hedge funds and institutional investors. Carry trade investment strategies are now becoming popular with individual investors. So if you are trading Bitcoin and you want to understand where you are, you look at the Aussie yen, you might say to yourself, you know what? If they've done this red vector candle right here, there could be a possibility of price in the short term coming back up towards that point. You can effectively exploit that, because it means that dollars are being put to work to be exchanged into Aussie, so Aussie can be used to buy Forex stocks, commodities, Bitcoin. Okay? When you have that logic in your minds, then that makes life a little bit easier for you to add substance to the idea that Bitcoin is going to break out. All right? So we've got that logic. We had the surprise reading today from the calendars. Here we go. Surprise reading on the retail sales. Tomorrow, we've got nothing really interesting other than this dude right here, Waller speaking, who is always deemed as a hawkish speaker. So just be very careful with Waller. He could say something that might scare the markets off. If he says tomorrow, now we're not cutting in September, then that might actually cause a problem for the market, even though he's a low impact speaker. But in other positive news, you've got Trump VP J.D. Vance stepping up to the SEC and Ripple. Just to put it into perspective, ladies and gentlemen, just to get the elephant out of the room, 58 cents XRP. I know we've had a bit of a banter with XRP, but ladies and gentlemen, it's moving up quite well. But then that would only explain why, with this happening, 300 million again in ETFs, inflows keep going up, all right? They are moving up, which could be, I think this is what could be happening, okay? If the Ethereum ETF is going to get approved, which is in 2 days' time, right? Naturally, that's going to bring volatility to the marketplace. Everyone's going to be buying Ethereum, everyone's going to be buying Bitcoin because everything's going up. So they could be loading up in what they can get hold of, which is just the Bitcoin ETF. So maybe I'm wrong. But it would have substance to it to make that suggestion, because you can go and buy the Ethereum ETF if you really want. If you want to go and check out what that Ethereum ETF looks like, all you need to do is, just go and check that out. ProShares. But this is a synthetic ETF. Now, those of you that aren't aware of what the difference is between a synthetic ETF and what a true or physical ETF is, synthetic ETFs are based on the derivative of, which means that based on Ethereum's price is going to dictate whether this bad boy goes up or down, okay? So that means it's prone to a lot of fluctuations. Whereas the physical ETF, the spot ETF or the Bitcoin ETF, which is what we wanted, which is what we got, is based on them purchasing the Bitcoin. So then when we go into Bitcoin itself, the ETF, you can see down here, everyone's paying attention to what's going on with the wallets. They keep on buying it all up. ARK's getting Bitcoin. Well, they sold Bitcoin. They bought Bitcoin. You know, BlackRock's not really done too much. Valkyrie stepped in and done some flavor as well. So this is the physical ETF. And when we associate the idea of the physical ETF and Bitcoin and 300 million in inflows is going into the ETF, it means that they're accumulating the Bitcoin. They're taking from the marketplace and they're storing it in, well, the transfer agent takes that Bitcoin, puts it into another vault or whatever it is, and stores it there, and you get the result of a ETF, the contract of an ETF, which then BlackRock charge you for just to hold on for it as long as you can. So I think it's a brilliant business idea because when you think about it, BlackRock's come to the table and said, you know something, these Bitcoin hold, and look, at the end of this little comment I'm going to give, tell me in the comment section if you actually think that it could be plausible that BlackRock had this thought, right? Larry Fink comes in and says, those guys in cryptocurrency, man, for God's sake, all you're hearing them saying is buy it to the moon, diamond hands, diamond hands. Okay. How about we get an ETF for Bitcoin and we can generate fantastic revenues off them buying the ETF and we charge them the fees for holding the ETF. Doesn't matter if Bitcoin goes up or down, but if they're buying Bitcoin, they're probably going to buy this ETF, especially if it comes from us, because we're the biggest endorsers right now. We manage assets under management. It's over $10 trillion. We're hitting walls, man. Like, you know, we're doing good. All right. So if we create that, we can then create an income, a revenue off the back of the diamond hands people, because they ain't going to let go. They're going to hold on to their Bitcoin. So you get the guys that will buy the ETF, and then you get the guys who are already in Bitcoin anyway, and they just want to try and get something on the cheap off the back of Bitcoin because they think that by them buying Bitcoin and holding on to it, they're taking away from the supply of Bitcoin. So naturally, these people holding the ETF are going to be engaging in diamond hands. We're just earning off the fees. Would that not be a plausible business plan to justify why BlackRock would be pushing for this ETF? I mean, come on, think about it. It's a revenue stream. They charge you for the ETF. They earn a recursive off the back of you holding the ETF. What better clientele to do it to? Diamond hands. Imagine. Hi, my name is Diamond Hands. I will buy a stock, anything that's associated to Bitcoin, and hold it because I'm a maxi. You can, BlackRock's like, you can be whatever you want, man. You just stay that way, right? Just pay the reoccurring fee. You just keep doing that. Yeah, you diamond hands, yeah. You do you. Good man. Said the man who's holding $10 trillion worth of assets under management. He's only got a measly 20 billion. Oh, don't even get me started. So that's where we are, ladies and gentlemen. The idea is, of course, that this 20% rally is going to be sustained off the back of these interest rate cuts or not, or the speculation of it, even going into the idea of the bonds market, just going over into it right now. You can see bonds are going up. That's good news. S&P moving up. And then we got the NASDAQ only clearing a 0.7% day. It's been a bit tricky for the NASDAQ today. But nonetheless, bonds are moving up. Yields are going down. Okay? That's good news. As long as yields are going down, investors are going into bonds, money's backing into the markets, yet the volatility index is going up. So it could mean that we've got ourselves quite a few guys that are effectively getting ready to run shorts by the principle of the volatility index. This is the put-call ratio, all right? It's based off the put-call ratio on the S&P, all right? So when this is low, you short. When this is high, you buy, all right? Now, this has been behaving a little bit weird, and they've even been challenging the prospect of this. So it's going to be very interesting to see how the volatility index plays out. Now, you ready for some Bitcoin price action? Word to my mother. Nice. Mark Dutch for mayor. Happy days. Any questions, ladies and gentlemen? Here we go. How many trades? Oh, RTB, thank you, my bro. How many trade setups do you give per week on Platinum membership? Are these easy to follow? It's on the euro, the euro, gold, oil, Bitcoin, Ethereum, and Solana. So it's 6 assets, 5 trade setups every single week, but it's more than 5. I'm going to be straight with you all. It's every day, 6 assets. 6 in the morning. Then I do the review at the New York session after the New York closes. Sorry, after the New York live. I give the guys a heads up on where we are, if we need to change any plans on the setups and what new setups we're looking for from there. And then in the evening tonight, I'm going to be doing more setups because what we need to get ready for is Asia. I do that Monday through to Friday. And then on the Saturday, I do a weekly review where I do a little lesson on depth of market or any questions that anyone has. And then on the Sunday, I do a weekly projection on what I expect assets to do from the Sunday. So that's ideal for the guy who's a swing trader, doesn't have the time to sit at the charts, can't take advantage of trades that are happening during the week. He just looks at it on the Sunday and says, okay, I like the idea of that. That lines up with what I say as well. Happy days, Tino. Let's make some money. That's what it is. Okay? That's what you get with the Platinum setups. But more importantly, you'll learn more about the hybrid system purely by being in the Discord. The guys in the Platinum chat, they are always running ideas to each other. It's like watching an army of traders. They're all talking about the same thing. And when you see their narrative, their dialogue all matching up, you end up seeing it coming into play on the chart. It's quite crazy to watch. Okay? Now, Bitcoin. Going over into the daily time frame for all the guys, the holders, just before we get onto that one. If you are going to, look, with regards to Bitcoin, because this candle is very important, okay? And if you are trading Bitcoin, by the way, if you are trading it, go and make sure you check out BTCC. It's our preferred exchange. And the only reason we're talking about it is because Mexi are doing the KYC, and most of the people in the United States might not want to do KYC. So with BTCC, it's KYC friendly, which means you don't need to have it if you're from the US, and you don't need to use VPN either, all right? You just only need to use crypto. So when you deposit in crypto. If you do want to use fiat, that's where KYC comes in. It doesn't matter where you are in the world. Because they're so heavily regulated, given that they have been around for more than 12 years, you didn't know that one, neither did I. So they've got reputation, and you can trade the NASDAQ and the S&P and all the other coins. Apparently, you've got loads of coins that you can trade on here. Those are just the main ones, the hot ones. You've got meme coins that you can trade in here as well. Loads of meme coins, crazy meme coins. Pepe's got some madness. The Solana ecosystem, Bitcoin eco, the bot and AI. I'd be looking at these coins right here because these are AI dominated here. You got the Euro 2024, like the team coins. That's pretty interesting. Lots of volatility with that, and there is volume, so don't get it twisted. There's little volume in there, but you can exploit those. Web, metaverse, and what have you. And then, of course, DeFi, which Avalanche took a mad move today. It was over the past couple of days. It's been moving up much, which tells me that people are going back into the staking story. So there's lots of activity in the staking game itself and innovation. It's all there for you guys. And 24-hour biggest price change is 100 troll USDT. Okay, so we got some interesting movement there. But yeah, go check them out. It's in the link in the description of this, and you get a benefit as well when you join with the link in the description, 10% on your deposits. Now, with that being said, the actual ROI on the trades themselves, we do it on a day-to-day basis, and I need to get that information onto the website. But the last time we checked it, we had an 80, I think it was about 83% win rate, and that was over 900, I think that's 900 setups. Since September last year to last couple of weeks, because it gets done every day. Yeah, well, I update it every day. I've missed the last 2 days because I've been busy. So yeah, about 900 setups. So about 83% win rate. I mean, for me, that's great. That is a brilliant win rate, in my opinion. Larry Holmes says that anything above 60%, you're terrific in the business. So touch wood, I'm humbled by it. I think I'm doing okay, you know, but that's over nearly 900 setups. That's 5 setups every single day. And it's more than 5 anyway. So that's the guys, they'll tell you. All right. But the setups. There are days when I give setups where people don't make the money because they get shaken out, all down to the risk. If you use light risk in anything, whatever system you're using, even if you don't need any setups, you just and even if you used MACDs as your trading strategy and you just weren't interested in the hybrid, if you use small amounts of risk, you are keeping yourself, or should I say, you are improving the odds of staying in the game when you use less. You know why they say less is more. Slow is the fastest way. As Lil Wayne would say, slow money is better than no money. When you've got that logic in your mind, then you eliminate the emotions. But the problem is we are sold on the idea of leverage. That's the problem, guys. When you're using too much leverage, you're going to get smacked in the face and then say, the system's bad, all this. But, take leverage by the horn. By what do they call it? By the horns. Yeah, take it by the horns. Yeah, hold on. But don't have that hold on to your life. Oh my God, I'm going to get liquidated. Take it by the horns and be in control and guide. All right? Direct. Make sure you're using the right positioning so that you're not shaken out. So that the trade tells you that you are wrong, not your exposure. Because you should already know what you're losing before you go in. And if you don't know what you're losing before you go in, well, you've lost. You have. Because an old saying would say that the markets can be way more irrational than you can be solvent. That's so true. So keep that in your minds. Mark Dutch, that is very interesting. You said that. Very interesting. Mad love, Zigzag. Is altcoin season near? Tino, do you look at charts all day? Yeah. I do look at charts all day. I'm going into a new premises and I've got TV screens that have not taken out of their box because in my head I'm like, I need a screen there and I need a screen there. I'm obsessive, ladies and gentlemen. And I'm obsessive with the monitoring. I play the game. And the game that I play is I pick vectors. It's practice for me. I'll look at a chart. I'll pull it up and be like, what we got here? That's why I trade. That's why I provide the setups that I provide that are all correlated assets. It's not just random picks. They're all correlated assets. Euro USD, gold, oil. Right? Then you've got Bitcoin, Ethereum, Solana, 3 of the biggest market caps in the cryptocurrency. When one moves, the others are more than likely to move as well. If one moves by itself and the other 2 are back, then we kind of know where the money's going. For example, Solana. Solana has days. There was an instance where we were projecting out Solana. I was having to do projections on Bitcoin, Ethereum, and Solana, but Solana just kept going up. But Ethereum and Bitcoin was showing weakness. So I was projecting Bitcoin to go down and Ethereum to go down, yet Solana was being projected to continue higher because that's where the move was, okay? And that was where it wasn't correlated, but 8 times out of 10, they are all correlated. So as long as the dollar is going down, everything that we spoke about in our setups with regards to the assets, they should be going up. I'm not pulling out random coins, all right, that are wild with volatility. It's just going to shake you out and no setup's going to bloody work. Those are just for the volatility dudes. But when I come to, when I'm looking at charts, I look at charts all the time. I've got screens that are ready to go in my new premises in various parts of the house, and they're all going to have live streams of charts. But some of them are going to have depth of markets where I'm going to be taking a depth of market because I'm practicing something. I'm training my eyes for something, and I'm looking at the depth of market from a distance. When you look at the depth of market from a distance, you kind of, when they say zoom out, you get the bigger picture. It's no different in the depth of market. See, the thing is with the depth of market, I'm having to pay attention to orders at a specific point. But when you stand back and look at the depth of market from a distance, you'll then start to recognize that price was at one point and then it shot up and went away from it. And then when you keep coming back into the charts and you say to yourself, well, over the last 4 days, I've been watching that price keeps going down to the lows of the depth of market or the profile, and then it always ends up reversing. So now what I'm going to do is the next time I do go to the charts and I'm up close with the actual depth of market, I'm going to be waiting to see if that move's going to happen the next time it gets into that lows of that profile, because looking away at it from a distance, it always ends up reversing from it. So now I've got in my mind, there's a pattern. So I wait for price to go down to those points, and then I zoom into the chart and look at it and say, right, I need to justify that with orders. So there must have been big orders that appeared at that point. And I've got those screens now in my house, and I'm going to have new screens set up across my house with depths of market all over the place. I'm buying licenses left, right, and center just so that I can have access to depth of markets on the Russell, on the NASDAQ, on the S&P. It's like, it's monitoring, man. It's like Big Brother. I'm watching it because I know for a fact that this stuff repeats itself. It always repeats itself. So just by that logic itself, then you got to train your eyes to understand the repetition. And then the only next difficult thing is the timing of it. But usually they're doing the same thing most of the time. History doesn't repeat, it rhymes. Okay? That's how I taught myself this game. It was simple. Just watch the charts. But you guys are being guided into knowing what to look for. I spent a long time looking at the wrong thing. And it took a long time for me to understand what I was doing wrong. Because I wasn't blaming me, I was blaming the market. When I started blaming me, that's when it changed for me. When I then knew that I could come to the chart. You could be the worst trader on earth. You could have a win rate of 30%, yet you're still bloody profitable. You just make sure you keep your losses to a minimum. That's knowing you. It's this madness here. When this isn't aligned, there's no chance. You know? You could... Never mind. Never mind. Listen, when it comes to leverage, all right, it doesn't... My leverage... All right, this calls for a sip of the tea. Man, hold on. Man, I needed that. Samuel, thank you. Samuel's my butler. And I say that from a humble place. I love the dude. He's my butler. That's another word for brother-in-law, but, you know. He's my boy. He's helping me out big time. His tea's good, but that's it. I'll be straight with you all. You will never trade like me. No one will. That's facts. Why won't anyone trade like me? Because you're not me. There's no magic to it. There's no mysteriousness behind why you will never trade like me. But that doesn't mean that you can't trade the same way. We will have differences in leverage. Me, I'm cool with putting down 185x leverage on Ethereum. Put $1,000 in, happy days. If I flip it, done. If I lose, what do I lose? $1,000. So I've already accepted what I'm losing. Some people don't want to do that. They don't like the idea of high leverage. You might not be happy losing $1,000. I'm happy losing $1,000 on a trade, but I won't spend $1,000 on something else that you might. You'll frown on taking $100 profit from the market. But you'll sit there, top boy, and be the big dude when you're down $1,000 in drawdown, You'll say it's part of the process, man. Leave it. It's not a losing trade until it's closed out. That is the wildest thing. Now, Buffett said that, yeah? Warren Buffett said that, okay? But who is that guy? He has liquid behind him. He can say that when you are the second, third richest person in the world. Of course it's not going to be a loss if you don't close it. But you say that when he sat on, Berkshire Hathaway sat on nearly $190 billion worth of cash. There's no qualms there. It's all good for him. But retail is trying to think like Warren. You'll never invest like Warren. You will trade the way you trade, and it's all based on your relationship to mullah. $500 on a pair of shoes for me might be $500 that you won't be prepared to pay. $500 on a night out drinking. Shut up. I ain't paying that on alcohol. Someone else might. Our relationship with money is going to be different. I'm a volatile trader. I'm a scalper. We are all volatile as scalpers. There have been guys who've come into cryptocurrency that have joined the Discord, swore on their lives they will never touch anything else but Bitcoin. They are swing traders and they are Bitcoin traders. Now they are the most prolific S&P and NASDAQ scalpers because they recognized their true ability can flourish when you're trading traditional markets. These are hardcore crypto dudes, okay? I remember you used to say to me, Tino, talk Bitcoin, Bitcoin, Bitcoin. They'd even come and join the Patreon and say, do more on Ethereum price action, Ethereum. Now, these are the guys that are asking me, Tino, man, can you just include NASDAQ? Can you include dollar yen, please? Same dudes. That were swing traders are now scalpers. It suits them. They don't trade like me, but we are all trading the same way. They find their way, they evolve, they learn. I'm a scalper, I'm prolific, I'm mad for it. I have a great day out for me, yeah, is depth of market. Across my 4 screens that I've got, okay, are on 3 ultra-wide 49-inch screens. They're all filled with depth of markets, and I've got a little screen, a 32-inch screen on the top, right, for me to have the chart. Everything else is exo charts and depth of markets. That's all I've got. And I'm like this. That's peace for me. That's heaven for me. I'm cool. Got my music on, Metallica, that's going crazy. Luckily, my next door neighbor, Barry, he's deaf, so he's no qualms even when Slipknot and Meshuggah come on. It's happy days for him. I'm in my zone. Because in my mind, I've registered the idea that the patterns will always repeat themselves. And I've just got to associate myself in certain instances in the chart where I believe that they could actually repeat. The leverage I use is going to be different to you. We have different relationships on money. You might go buy a 50K car. I might go and buy a 10K car. I might go and get a 50-year-old car. You might go and get a 2-week-old car. But I do like the old cars, though. 735, man. They're the ones, man. The old BMWs, 735. Man, heaven. That's my flavor. I want to get my, man, Shelby's. Boy. You know? The old school cars. Muscle. I like those cars. I would not hesitate to buck 50 grand on an old car. But people will frown on that and say, why don't you go and buy a brand new car, Tino? But I'm not buying it because it's new. I'm buying it because of its age, its muscle. It's what, again, we will never trade the same. Okay? But we all trade the same way. Okay? And don't put pressure on yourselves either. I've been trading a long time. I'm 39 in September. I started my first ever trade was when I was 16 years old. Okay? And it was an oil-based stock. That's when I placed my first trade. And since then, it's been the maddest learning curve about myself. Someone said today that traders will make good spouses, right? They are good husbands. Why? Because if they've done their due diligence in trading, they have been humbled. And you'll have yourself a very humble person, okay? So it's a learning curve. It really is. I will never proclaim mastery of the markets, never. Because I'm always surprised with, man, can you believe it? They did it. They did it. They did that again. They did it again. They did it again. I'm going to be talking vectors forever, ladies and gentlemen. And those of you who have been with me from day one will completely understand exactly what I'm saying. Some of you will think he's repeating it again. He's repeating it again. Yeah, because when you can tell me that the market doesn't repeat itself, I won't repeat myself. When your trading becomes boring, you're making money because there's no emotions. You've gone past the idea, I can go and buy a Rolex today, or I can go and buy this, I can go and buy that. When you're thinking on how much you can spend when you are making money in trading, you are realistically saying that this is how much I'm going to lose because you're not taking it out of the chart. You're leaving it there. It's doing nothing. It's digital nothing. If you're not banking it, people will share their triple-digit profits with the trade still open. That's bullshit, bro. It doesn't work because the trade is open. In the next 2 minutes, Bitcoin could slump. And your $1,500 gain ends up becoming a $500 loss. Share that screenshot, bro. You're going to look a little bit silly now, aren't you? Closed profits are the best way. Keep stacking the closed profits. Closed profits. That's all you need to do. Hedge fund managers, when they get the new apprentices and the trainees, they're like, your goal is, and our goal as a team is just to make that 0.5% on our balance or whatever profit target is they have. Small wins, small wins, small wins. Yeah, man. They look at it at the bigger picture. People want to make $1 million 13 days ago from the day they start trading. They want that instant gratification. They want the Lambos, they want the Ferraris. Put your money to work. You know? Put your money to work. But put more work on you understanding how to do that. You want to try and get rich in trading? Cool. You're not there yet. You're not going to get anywhere close to it if your goal is to make money in trading. True. It's a true story. It really is. If you're trying to make money in trading, you are new and your motivation is money, you're going to lose a little bit more. Right? That's the truth of it. But you got to love the game. You got to want to learn to love how you can grow as a person. There are days when I walk up from my trading desk. Like, I've taken wins, man. I've shown you those wins. I have really good days. We're making 10, 15, 20K days, okay? You've seen it on the live streams. But I won't hesitate to tell you that I lost 20K, or I lost 10K, or I lost 15K. I don't hesitate. I know my edge. I know I can make a recovery back. Easy game. I keep myself aligned with it. That's what this game's about. Be a brilliant loser by focusing on what you can lose. Don't think about what you can make because the end product is money. It's the agreement you've got with the market. You take a good trade, it works in your favor, there's money at the end of the pot. Doesn't matter what trade you take, what style, what system, whatever. You take a trade and it works in your favor, you're getting money. If it doesn't work in your favor, you're losing money. But your goal is to try and keep the losses as small as possible and your wins as often as possible. Make sure you're paying yourself on your wins. It's the fundamental rule of poker. If you've got an edge, all right, statistically, a pair of aces pre-flop are going to be winning 82% of the time. Happy days, all right? Well, no more than that, all right? Then when the flop comes, the odds are down, all right? But pre-flop, you have got statistically the best hand. So over 100 hands, you're winning hands down on an all-in, okay? Over 100 hands, you've already won. See your trading in terms of sample size. Don't take 5 trades and think after your 6th trade you've lost, you think the system's crap. Doesn't work like that, man. I've done the due diligence. I've sat and done it for hours and hours. I wasn't going out. I wasn't doing nothing. I'm a recluse, ladies and gentlemen. I'm telling you, we do a Traders Reality meetup. I smell alcohol. I'm shit-faced. Done. That's the truth. I'm Greek. I should be chilling in red wine. I take communion with red wine. I'm shit-faced on a Sunday morning because I've had that little sip. The body of Christ. I drink it. Done. I've done my communion. Okay? And then I'm walking back with a headache and I can't walk straight because I'm done. That's in a church, bruv. I've ranted too much, man. I've ranted too much. Sorry. This is not a laughing matter, sir. Bottle of water. Listen, stop taking the piss. Aluminum. Victoria, we sensitive people. This is true. Oh, here we go. Singularity. Tino, I agree with what you're saying about slow gains, but if you think about it, in crypto, a 10% move at 10x is already a 100% increase. All right, look at this. So let's just take this for example, okay? 225x leverage. Sounds nice, doesn't it? Yeah, it does. That is telling you, all right, that you can use small amounts of liquidity to get exposure to large amounts of liquidity in principle. You are leveraging, okay? If you have in your mind that if you can't manage a small amount of money, then having a large amount of money ain't going to do nothing for you. Okay? You ain't going to do anything with it. The psychology is not there. You don't know what it's like to see, and it's even bad, right? You know when you get funded programs, the thought of having $250,000, right? 90% of the traders that get into funded programs, they don't have the psychology, okay, of using that amount of money. They don't have the psychology of holding on to a specific amount of risk. There are so many variables against traders that use funded programs. That's why I suggest, in my opinion, okay, that you get into any funded programs, whatever money you make from there, you withdraw. And as you get better and better at withdrawing and making money, you then put that money, you put it in a pot. Okay, I do exactly the same thing. I get my accounts to a certain stage, withdraw. All right, close them off. And then we start working on our personal account. And we start building that pot, keep building it. And then you start migrating over there. I'm getting free money with funded programs. All right, I'm going to take that all day. Why should I put my money at risk? Fun fact, hedge funds don't use their own money. They use yours. Because you give it to them. Invest with this mutual fund index to get yourself a average APR of annual return, whatever it is. So having that logic in your mind that, yeah, but with 100x, I can get double X, Y, and Z. It's the wrong way to think about it. Leverage should only be used as a tool to capitalize on what you already have. That means you're in a good, profitable trade, okay? And it's working in your favor. Then you smack the leverage. And you do it in such a way where your profit or your entry doesn't really shoot up as aggressively, but it gives you that little bit more leverage. What do they say? Like when you want to move something, just that little bit of leverage is a massive impact on whatever it is you're trying to do. But the problem is people now are using massive leverage at the start of it, creating the biggest impact from the start. What do you expect, bro? Of course you're going to get liquidated. Leverage has to be used very wisely, okay? So just take that into consideration. All right, ladies and gentlemen, listen, It's common sense, yeah. It is. It is common sense. But believe it or not, common sense seems to be hard to practice. I'm human too, you know. We all are. And when people say it's just common sense, well, why does that statement get thrown about? Why are people continuously reminded that it is common sense? It clearly isn't common sense. Because people ain't ding, 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 ding. Anyways, ladies and gentlemen, mad love and respect. Too much of a long live stream. I'm so sorry, guys. Really sorry. But psychology talk, I get into it. Have yourselves a wonderful evening. I dare you to like and subscribe. I really do dare you to like and subscribe. Have a good evening, gang. Peace. I need my tea.